Alright guys, so things are getting really wild and today's report will show you how global trade is breaking down. Now when trade between the US and China falls, it means a world of structurally high inflation. But it's high inflation for the US. That's the big difference. As a byproduct, the rest of the world will actually be getting better prices from China. Now Beijing will have to reroute supply elsewhere, so countries in Europe and Asia will actually enjoy lower prices. So we have to give Trump a salute here for helping us enjoy cheaper Chinese goods. We can see from January to April, China's trade surplus with Europe has hit a record high. It reached over $90 billion in just 4 months. And we can expect it to end the year at over a quarter trillion dollars. Now, China will want to keep their market share high, not just for the money. It also makes them useful to the world, making them much harder for the US to sanction. Meanwhile, Europe will still need affordable Chinese inputs. To climb over Trump's tariff wall, they need to buy more from China, which is quite ironic. But in the US, there's still a big insistence that inflation is not a problem. Besson is convinced that Chinese exporters will be subsidizing US importers.
Are saying, I know what the South China Morning Post wrote within the past 24 hours, that 65% of the tariffs will likely be eaten by the Chinese producers.
But is that really the case? Is Besson really telling the truth? Firstly, no one has the real data except Chinese companies themselves, but we can extrapolate from all the trade flows. Now, Besson's referring to this article where US retail giants were demanding Chinese suppliers shoulder the burden to eat 66% or two-thirds of the tariffs imposed by Trump. Now, basic logic should tell us that this is impossible. Retailers, their margins are razor thin, and their cost price from China is already dirt cheap. It's just impossible. Chinese suppliers themselves will get put out of business. Besides, they don't need to eat the tariffs. They can simply slash prices by 5 to 10% and sell it to other parts of the world like Asia or the Middle East. And the data itself is starting to show us the truth. Here's a chart for our good friend Scott Bessent. Despite his tariff truce on China that lowered rates from 145% down to 30%, ships just aren't moving. It has been over 2 weeks, but yet shipments are not recovering. The number of container ships have been from 60 to 45 or so. That's a big drop. That's a big decrease that shows Chinese suppliers are just not shipping stuff to US markets. Now, the administration has been hyping up the importance of the US being a deficit country, but China is obviously surviving while cutting away US trade. There are only two conclusions here. Either the 30% tariffs are still too high and suppliers don't want to eat the tax, or US importers are burning through their stockpiles and hoping for Trump to do a taco. Let's not forget that Trump just had a call with China, with President Xi, but nothing conclusive was discussed. There was no agreement made. And regardless of what happens, we can expect the US to keep playing hardball until reality hits. Now, I won't expect them to reverse the global chip ban. Maybe they might reverse the Chinese student visa, but that won't nearly be enough. There's a lot of insistence from Lutnick and Besson that China needs the US market. But is that really the case? It's important we get things right here, especially if you are trying to allocate money. In 2018, the US accounted for 20% of China's total exports. That's rather significant. But that dependency has dropped down to only 14%. Considering the size of China's export economy, that's a big feat. They are diversifying their customer base like never before. But that's not all. China's domestic market is growing by leaps and bounds. Listed Chinese companies rely on their local consumers to really survive. Only 15% of their total revenue comes from international customers. Revenue from the US is probably just a small fraction of that, considering the tariffs today. Now, some estimates put it at 2 to 3%. It's a big reason why Chinese stocks are still heading up despite a tariff war. The main driver of the Chinese economy is their own people, and to a lesser degree, Europe and Asia as well. They also play a role, but the US isn't that significant anymore. But what's significant is how US revenue from China is also getting hammered to a big degree. In April, Chinese exports to the US collapsed by around 21%. But let's look in the reverse direction. It's phenomenal, it's horrific. US ocean carrier exports to China declined by 77% from March to April 2025. Now, if this isn't a collapse, I don't know what is. This is a result of China's retaliation plus Beijing's triple digit tariff on US exports. Now, will this somewhat recover? Yes, it might, but we shouldn't count on a miracle happening. Chinese buyers have been sourcing from other suppliers and they will likely continue to do the same for many imports that they bring in. Trump's tariffs aren't happening in a vacuum where only America gets to punish the world. Reciprocal tariffs, they cut both ways, and now US industries will be in deeper trouble. As a whole, US shipping exports are facing a reversal of fortunes. Thanks to Liberation Day, US exports fell by insane 78% down to just 57,000 TEUs. Countries bought all they needed in March, and now they are refusing to buy US goods because prices are rising across the board. There's one key fact that many people still don't get. Trump's import tariffs also hammers down on US export demand because a huge portion of industrial inputs like chips, steel, and aluminum they all come from other countries. The tariff war just makes US industries less competitive. And let's just take steel and aluminum for example, it's a great reminder of why US exports to the world, especially in heavy manufacturing, will fall. Now, the US imports 26% of their total steel consumption. It's worse for aluminum, coming in at 44%. Now, what happens when you double the tariffs to a 50% hike? Suddenly, all the products made in the US that requires the metals cost more. Maybe Americans will be forced to buy those, but the rest of the world they have options. There's still free trade going on outside Trump's economy. It's why China's being so chill with US tariffs on them being 30%, because it's three times the pain Trump is inflicting on his own consumers. But unless he tackles this immense pressure, it's going to hammer down on US industries. There's also another consequence of his trade war on China. The central government is starting to unleash a barrage of stimulus to revive domestic consumption. Now, rates are so low in China that the deficit is being ramped up like never before. China's deficit from January to April has reached 2.7 trillion RMB or around $370 billion, dollars, and that's a 50% increase from a year earlier during the same period. Beijing is also planning to inject $70 billion dollars in new capital to build even more infrastructure. And all this new industrial spending means the domestic consumer will start to get stronger and stronger over time. But will US companies within China actually benefit from this? Now, chances are that they won't. If the US keeps waging on this tariff war, especially on Huawei chips, this could just trigger a wave of national buying of local brands. So instead of Starbucks, people will choose Luckin Coffee. Instead of an Apple phone, consumers could grab a Xiaomi set for half of the price or even lower. And according to Apollo, the US is earning a lot more from local Chinese consumers than the trade deficit. Over $1.1 trillion dollars in revenue comes from Chinese money. And this is about to get compromised if a US China solution isn't worked out. US products, their prices aren't exactly the cheapest around. If Trump continues to pressure China, don't be surprised if the central government drops a bombshell directive. All they need to do is to encourage private industries to shift their buying local and it's game over. Now, when Beijing tells their companies to do something, it's not really a recommendation, it's more of an order. And by all measures, they will listen and go local with their sourcing. Now, it's important we get into the minds of the administration. The playbook is all about stopping China from selling stuff to the world. It's not some wild conspiracy theory. Lanik just revealed it to the world.
In return for us lowering ours.
Well, that's true for the things that they'll take from us.
That's called reciprocity.
Of course.
So you or are you not seeking reciprocity in these trade deals?
We are absolutely seeking reciprocity with respect to things that can be reciprocal.
But you just said,
but when they're importing from China and sending it to us,
you just said that if a country came to you and offered you the ultimate reciprocity, no tariffs, no trade barrier, in return for us doing the same, you would reject that.
Of course, because they buy from China and send it to us. Don't you agree with me?
Suppose they said we won't buy from China.
Now we're talking. If it was Vietnam,
would you accept that deal?
We would consider it. For what things? For
what
products?
Would you want to change?
Well, there are certain products we want to reshore. We don't want other people making them. We want to make pharmaceuticals here.
All right.
We need to protect our.
But here's the crucial part: the US wants to reshore critical industries no matter what countries do. Even if it's Vietnam, Japan, or whoever else drops their tariffs to zero, Lutnick will still bring the hammer down. However, he's about to get really, really disappointed. Remember China's stranglehold on rare earths? Well, it's beginning to cause a ton of problems in US manufacturing. And let's do a recap on this dependency and you'll understand what we really mean. Between 2020 to 2023, 70% of US rare earths comes from China, and that's across the board. But in certain elements like scandium and metals needed to make magnets, the dependency is closer to 90% or 100%. So a cutoff here could cripple US production, especially in chips, robotics, and other electronics. Now, this spells doom for all these high-tech industries. Not only do their costs go through the roof, their production levels might collapse as well. It's not just margins getting squeezed, but overall revenues. Now, the Wall Street Journal just came out with a really wild piece. US automakers are racing to find a workaround to China's rare earth export ban. Guess they really need those metals to build their magnets. But here's the catch: they might need to shut down assembly lines and even shift some production of parts to China. In other words, shut down US factories to build more in Shanghai or Shenzhen. Now, didn't Lutnick say that the opposite was going to happen? Weren't factories supposed to come back to the United States? And this is the importance of supply chains and industrial ecosystems. You just can't recreate one from thin air. Besides, there's also a really wild loophole from the US side. Shifting production to China could actually help you escape the Chinese ban. Beijing just did a judo flip on the entire tariff war. Thanks to export controls, companies can't import magnets directly from China or the raw materials to make one. However, if the magnet is in a motor made in China, you can do that. So almost immediately, we can see how the trade war is being fought. Trump is weaponizing the US consumer market, hence the tariffs. But China is doing it in a very different fashion. They are restricting critical inputs for US supply chains. So if you want our rare earths, well, guess you have to build your factories here. So we are witnessing one of the most epic tug of wars. And Beijing is not playing around here, guys. Trying to smuggle rare earths out of China is going to get harder. Now, we have reports that Beijing has developed a new tracking system to find out where their exports are going to. So trying to get these inputs from China the Captain Jack Sparrow way won't work. So the dream team might have a ton of tricks, but Beijing also has surprises of their own, and once again it's a battle of attrition. If the US failed to contain Russia, it's going to be even more impossible for them to contain China. But let me know what you think. Will China continue cutting away trade with the US? And will American automakers really relocate to China just for rare earths? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.